talk a little bit about the Fed and the Treasury. They've been criticized for the Main Street lending facility. That's a program that hasn't even launched yet. Steve Liesman joins us for more on that front. And Steve, which one of the programs is this?
Right, exactly. So, okay, you got the PPP program, the Paycheck Protection Program, which is the one everybody's talking about, gets all the discussion. It's a $350 billion program they're talking about scaling up. This is a program that hasn't launched yet. It's a $600 billion program known as the Main Street Lending Facility that will be run once it's launched at the Federal Reserve, aimed at mid-sized businesses. So there's going to be money available, but even before it's come out or been launched or they have the finalized rules, it is under criticism. Let me go through what this facility is here. It's a $600 billion program. It includes $75 billion from the Treasury. Banks will underwrite 5% of these loans. These are 4-year loans at a 2.5% to 4% interest rate here. Now, companies, it's $1 million minimum loan, principal and interest deferred for 1 year. So what's the criticism? Unlike the PPP program, these loans are not forgiven. The Treasury only leveraged this up 8-to-1 compared to 10-to-1 in other programs. So some people say there could have been more money available here. Companies have to only use a, quote, reasonable effort to retain workers. The overall idea is the government is not taking enough risk here to help mid-sized businesses here. Companies also, they can't pay dividends or share distributions until 12 months after the loan is repaid. Glenn Hubbard, a frequent Squawk Box guest, former CEA chair, writing with Hal Scott from Harvard, writes in the Wall Street Journal, the priority has been protecting Treasury's $75 billion investment rather than quickly getting small businesses the loans that they need. Now, Treasury and the Federal Reserve declined to comment. I guess you could take it from their point of view, which is that they had to put this together real fast, never been done before. They're balancing the need to get the money out with protecting taxpayer money against fraud. Tremendous reputational risk, especially at the Fed. They've never done this kind of thing before. Fed had a comment period. 2,000 comments came in. They're working fast, we understand, to get this done. Maybe it'll be launched by May 1st. And if it does work, the Treasury has more money that it could put in.